Hello, this is Jordan, and this video is being recorded on the afternoon of Friday, February 25th, 2022. Thank you for joining me. Hope everyone had a great week. If you're new to the channel, make sure you subscribe because I will have a lot more content coming in the days and weeks ahead. Thank you. And in this video, I'm just going to give a quick wrap up of the week. I did have a Daily Gold podcast scheduled today, but we weren't able to conduct that, so I'm posting this video analysis instead. And basically, to sum it up, I mean, buy the rumor, sell the news. Gold was able to increase. Really, you have that gap there on this weekly chart. You can see you have this gap around 1840. So that's really when the war move started. I mean, we saw a huge move yesterday on Thursday where gold moved quite a bit. I want to say from the low 1900s all the way up to 1970, 1975, and then it declined in a 24-hour period. I think almost $100 before rebounding to around 1900. It closed today a little bit lower than that. So this is a clear failed breakout. And guys, this is why I'm constantly talking about the importance of weekly and monthly charts. And even daily charts. I mean, we had people on Twitter, gold bugs, screaming about a breakout, $2,000 gold. Gold hadn't even finished the day yet. It was just the beginning of the day. I mean, at least wait. You got to wait for how the market closes, because that's obviously the most significant. I mean, intraday moves really don't mean anything, unless you get a huge reversal, which happened in gold. And coming back to this weekly chart, you can see there's strong resistance at 1900. Depending on where we close Monday, the monthly chart looks pretty good, but we weren't able to I don't think we're going to close the month above 1900, obviously, at this point. So where's the support for gold now? Well, the 200-day moving average, the equivalent, comes in I think around 1812. The 400 days a little bit higher than that. I want to say around 1830. So those are the support levels to look at. Gold is likely to fill that gap when this Ukraine stuff began in the around 1840, I should say. And then we have the moving average support below that in the low 1800s. You have very strong weekly support at 1780. Meanwhile, silver, silver, it's lagging gold, and we see this constantly. And you can go back to 2019, just before where I started this chart. And that's one example where gold was above its moving averages, and then it had to break out for silver to move above its moving averages and really get going. And so we see the same thing. I mean, look at the weekly candle on silver. That's even nastier than the one on gold. So silver, I mean, it has established strong support around 22. But silver, to really get going, we're going to need to see silver make a weekly close above the November high. I mean, there's a lot of resistance around 25, give or take a $0.50 on either side. So, my sense here is that, we can now see that gold needs to break above 1900 for silver to break above, let's call it 2550. And so that breakout in gold would be enough to get silver to 28. But gold is going to have to make a new all-time high, I think, before we see silver move above 28, 29. Certainly, I think we need to see gold make a new all-time high before silver clears 30. So that's the thing with silver. It's going to lag gold. Then when gold breaks out, silver starts to run. So you don't have to be a hero and get involved in silver immediately. You can wait for gold to break out first, and then we're going to see silver move. So, and also the macro picture, I don't think it's favorable to silver at this point. It's one of what, at least what I think could happen over the months ahead is we're likely to see inflation come down, the rate of inflation. There's obviously growth concerns. That's the type of environment where gold does really well, not silver. Silver does well when gold breaks out and gold gets going. So That's why I don't see silver really blasting off. But, last thing I want to mention, as long as we see gold hold above, 1780 or 1800, let's say, then silver should hold above that blue line at 22. So that's my take on gold and silver at the moment. And, what's going to determine whether this correction or this pullback, this consolidation, what will determine if it's going to last 6 months, 7 months, or 1 month, or 3 months, or 2 months? It's going to depend on how the U.S. stock market and the U.S. economy perform. Now, obviously, that's going to be correlated to Fed policy. The stock market is very oversold. It's rebounding, so the stock market will rebound as gold consolidates. They're kind of inversely correlated in the short term right now. And so if the stock market is able to make a new high and the bull run continues, then the Fed is going to be able to hike rates for most of the year, I would think. I don't think that scenario will play out, but it is one potential scenario. Now, if we see the stock market rally, but it can't make a new high, and it falls again, it consolidates in bearish fashion, the market will price in fewer and fewer hikes and less tightening from the Fed, and that's obviously going to be bullish for gold. I mean, I looking here, the next catalyst for gold is going to be it'll be either the Fed or either the stock market after rebounding, it makes a new low. That'd be a huge catalyst for precious metals, or the Fed removes some hikes and it pauses, or it has to quit hiking sooner than the market thinks at this point. So, I mean, we could see both those things happen, honestly, because if they're actually connected, because if the stock market trades down, it makes a lower low over the months ahead, then we know that the Fed is going to stop hiking soon, and all the worries about inflation are going to start to turn to growth. And that, I think, is the point when we're going to see the sector make its big move higher, precious metals. And now it's just a question of, is that a couple months away, or is it like 6 or 7 months away? I don't know. I mean, I have some thoughts on that, which I just shared, but I'm throwing it out there. And, gold against the S&P 500, as you see there in the chart, this ratio is very, very important. And something to key on is how this ratio performs when the stock market rallies. Do we see this ratio holding above the 200-day moving average? Do we see gold consolidating bullishly in the low to mid 1800s, around 1900? Or do we see, as the stock market rebounds, do we see gold declines to 1780 or the mid 1700s again? So these are the things that are going to give us hints as to how long this next little period will last. But, ultimately, we're in a bullish position. And, as I said in the last week or two to subscribers, the long-term risk is now being out of the market. Gold is setting up for this massive move higher. And as I've been saying in this video, it's just a question of, are we going to see that breakout move begin in the next few months, or is it going to take longer than that? That's all for this video. Let me know in the comments what you think. Follow me at TheDailyGold.com. You can get everything there. Thank you so much. Really appreciate it, and hope you guys have a good weekend. Talk to you next week.